Hey everybody, Rory McDonald from MacDon and Associates here with the next episode of Tuesdays with Rory. Here with Brad Beels. Brad and I, we just did our first transaction together, hopefully of many, right?
Hopefully many, yeah, absolutely.
Yeah.
That was a good time.
Absolutely. Helped a family out with the purchasing of a home in Macomb Township. And I've mentioned this before just from conversations with other lenders that I've had too. I am not an expert in the field of mortgages. I'm not. And so for me to come on here and speak from that perspective, I'd be doing you a disservice. And so I'm bringing on an expert that is Brad Beels, Cross Country Mortgage. So happy to have you here in the studio today.
Yeah, happy to be on. It's exciting.
Definitely. Share with the people a little bit who you are, what you're all about, and just share with us some of that.
Yeah, so I'm Brad out of Cross Country Mortgage in Bloomfield Hills. We have a team there. About 6 people. Right now we have 6. So, full service, just really try to tailor each mortgage to each person and make sure that we're doing a great job communication-wise and make the flawless, smooth, and really try to, make sure that it's not a stressful process because it's going to be, but alleviating as much as possible off the client and you as well.
Yeah.
I like how the other day you did that Facebook video on staying in your lane. I
Yeah.
that one guy, and that's kind of how I am. I do the finances, but people ask me all the time, is this house worth this? Is this a good whatever? And I just say, hey, call Rory, ask him because I don't know. That's not what I'm about, and that's not what I do. So stay in your lane and really figure that out. And I focus on the finance side of things.
I love it. So one of the things that I've noticed, and Brad has done a really good job throughout the course of this particular transaction that I got to do with him. So I'm noticing right now, interest rates are absolutely insane. They're crazy high in comparison to the last 3 years.
Yes. Yeah. Relatively to the last 40 years, it's still in a good spot, but
yes.
Sticker shock has really got to a lot of people.
100%. And it's slowing things down without a doubt when it comes to buyers making a decision to purchase. However, in this particular transaction, I know you've done this with other clients as well. Mm-hmm. How is it that you're putting them in a position to move forward with a purchase? Not convincing them to move forward, but really putting them in a position where if this is something that is a necessity right now, making it so that they're capable of purchasing and not having the interest rate break the bank and still being able to buy in a market like we're in now with almost 6.0 interest rates.
Yeah.
Right.
Yeah. So a lot is payment based. So a lot of people, when they're buying a house, you have to be making sure that you're comfortable with the payment because that's the payment you have to make each month. So 2 of the main ways that we can get your payment lower is a 2-1 buy down, a seller paid 2-1 buy down. So basically the seller is going to contribute money to buy down your interest rate 2% for the first year and 1% for the second year. And then after that and every year forward, so the other 28 years, you're going to be, with that normal rate. So that's a good option depending on how long you're going to be in the house, what your goals are. And then another way is, permanent buy down. So we can buy your rate down for the length of the loan, all 30 years, 15, 20, whatever you want to do. And the seller can pay for that as well. So sometimes we, maybe eat that into the purchase. Sometimes they go their own pocket. Just kind of depends on what their goals are and where they're at financially and what they want to do.
Definitely. Mm-hmm. You mentioned with that being said, you mentioned the piece around like their goals and what it is that they're doing as far as purchase. There's this word that's going around, or really this phrase that people are using a lot. I'm noticing it in my world, and I know that you are too. And I'm sure some of you on here are saying this on a regular basis. And it's this simple phrase, my forever home. Forever home, right? Yeah. A lot of people, that's their goal. They want to move into a house and they want to never move again. This is my permanent home. I'm going to set roots here that will not be uprooted. But there's this other group of people, and I put myself in this bucket of people who are looking at it and going, I need to ebb and flow. Mm-hmm. I need to change with what it is that the market's doing, and really capitalizing on the fact that, oh my gosh, prices of homes are at X number of dollars. I'm able to have a return on this and upgrade my home. Yeah. Are you noticing that too, since your career really jumping into the mortgage business and being a super detailed person when it comes to the finance side? Yeah. What are your thoughts on that? Are you seeing people do that? What suggestions do you have to some of our listeners here too?
Yeah. So a lot of people do they think that this is their forever home and that's their forever loan.
That's good,
which
man.
is not at all true.
That's good.
It's tossed around a lot around in our industry. It's marry the home and date the rate or date the loan or whatever. And you buy a house, you may live there for 30 years, but chances are you're going to refinance within 5 to 7 years, or you're going to move within 5 to 7 years. A lot of people, I've had first-time home buyers come to me and they say, this is my forever home. And it's just them and their wife, them and their girlfriend or whatever. And your family grows, your goals change, your income changes. So a lot happens. So just making sure that it is going to be for what your goals are, and really focusing on the return on investment as far as what you're putting down is going to appreciate in value no matter what you put down. Your $200,000 house can appreciate at the same amount.
Yeah.
So if you put down 5%, it's going to appreciate 5% in the next 3 years. Or if you put down 20%, it's going to appreciate 5% in the next 3 years. So your return on investment at 5% down and 5% in 3 years is 100%.
Yeah.
So that's what we really look at, because you can't make 100% in the stock market anywhere, ever. So in 3 years, you're going to make 100%, whereas you put down 20% and you're only getting a 25% return on your investment in those 3 years.
Yeah.
So really focusing on that, but some people, it may make sense to put down 20%. You're a little later in your life, you're not planning on ever paying the house off. So really focusing on that payment being as low as possible. So that may make more sense for them. For sure.
Yeah. You know that meme that you see all the time, of my guess is you see it because you're in a finance world. The meme of the person, the Rain Man thing with all the numbers.
Oh yeah. Yep.
Like that's what's going on in my head right now. Like I'm thankful that you are able to detailed know this in your head, because I'm just like, well, what's going on? So
yeah, and you're not going to get everything out of that in this video here. So obviously call me, call Rory, you can get in touch with us, and we'll explain it to you in more depth and really we can sit down for an hour and I can explain it all to make sure that you are understanding exactly how this transaction or your first house is going to be an investment and not just what you live in each day.
100%. All that being said, like the piece that I wanted to nail on that is it really just goes to show how important the team is behind you.
Yeah, absolutely.
And we haven't even gotten to the world of insurance or title insurance or, inspections or appraisers or any of that stuff. We haven't even gone down that road yet.
Yeah.
This is just two parties in a really like a 5-party situation.
Yeah. I tell clients all the time, there's about 25 hands on your file or your process at any given time. So it's up to us to, and then you add in the appraiser and the title and the insurance. It's 5 people that are really handling 20 other people that you don't ever talk to or ever see in the background.
Right. Yeah. For people out there listening, how do they get in contact with you, Brad? I'm going to tag you on this video too, so that you can see it, and be able to share this as well. Mm-hmm. But how is somebody listening today, who's, hey man, do I qualify? Hey, I really love what you have to say. I really love the investment side. I really love how your brain works. How do they get in contact with you?
Best way would be by phone. So my phone number, 586-817-3818. That's gonna be the best way. I do have, everything online. If you search me, Brad Beels, cross country mortgage, my Google page will come up, all my cross country stuff. So the team's on there. There's an apply now link if you want to go about that way. But my favorite way is just over the phone and then, belly to belly, sitting across from me and just kind of sitting down and talking about it. That's how we found is the best way to really dive in and making sure that, we're meeting your goals.
I love it. Brad, it was a pleasure having you today. I'm going to grab this. Cheers, brother.
Cheers.
Thanks to a good deal. Good working with you. Thank you, you guys who are listening today. Have a very blessed day. We'll catch you next week on Tuesdays with Rory. See ya.
Thanks.